$24.8 billion, 82% growth. Google Cloud just posted the strongest quarter in cloud computing history, and artificial intelligence is the engine behind it all.
From a humble app engine in 2008 to a standalone business unit in 2016, Google Cloud spent years as the underdog. But the pivot to enterprise under Thomas Kurian and the explosion of AI demand changed everything. The revenue trajectory tells the story. 28% growth in 2023, 63% in Q1 2026, and then 82% in Q2. This isn't just growth, it's acceleration at scale.
The engine behind this surge is generative AI, with products growing nearly 800% year over year. 75% of Google Cloud customers now use AI tools, and demand still outpaces capacity.
At the heart of Google's AI machine is a custom chip called the TPU, the Tensor Processing Unit. Its core is the Matrix Multiplier Unit, a grid of thousands of processors executing AI math simultaneously. This is hardware purpose, built for intelligence.
The latest generation is Ironwood, 4.6 petaflops per chip, 192 gigabytes of HBM3E memory. A single superpod of 9,200 chips delivers 42.5 exaflops, 24 times the world's most powerful supercomputer.
Google is now splitting its TPU into two specialized chips. The 8T for training, a Broadcom-designed beast, and the 8I for inference, MediaTek's cost optimizer. Because inference is now the single largest cost in AI. On top of this hardware sits Gemini, Google's frontier AI model, and an entire agent platform. Agent-to-agent orchestration, long-running autonomous tasks, and no-code agent builders. This is where compute demand multiplies.
The financial picture is staggering. $24.8 billion in revenue, $8.8 billion in operating income, a 35.6% margin. Google Cloud isn't just growing, it's printing money.
But this growth comes at a cost. Alphabet raised its 2026 capital expenditure guidance to $195 to $205 billion. Combined big tech AI spending is approaching $700 billion. This is an arms race.
The cloud backlog, contracted work not yet recognized as revenue, exploded from $240 billion at the end of 2025 to $514 billion in Q2 2026. That's $500 billion of locked-in future growth.
Behind Google's AI machine is a multi-supplier ecosystem. Broadcom designs the chips, MediaTek handles inference, TSMC fabricates on 2-nanometer nodes, SK Hynix provides the memory, and Anthropic anchors demand with a 3.5 gigawatt deal.
If you're finding value in this breakdown, hit like and subscribe for more deep tech analysis.
Google Cloud holds 14% of the cloud market, still third behind AWS and Azure. But it's growing at 82% while AWS grows at 28%. At this rate, the rankings are shifting fast.
The investment opportunity spans the entire supply chain. Alphabet is the direct play. Broadcom holds a $46 billion TPU contract. TSMC fabricates every chip. And SK Hynix provides the HBM3E memory that makes it all possible.
But there are real risks. Gemini 3.5 Pro is delayed. Negative free cash flow hit $5.9 billion, a first for Alphabet. And if AI demand slows before capacity catches up, those $200 billion in capital expenditures become a very expensive bet.
Google's AI bet is either the smartest investment in tech history or the most expensive gamble ever made. Drop your take in the comments and subscribe to see how this story unfolds.